just confirm that a bit. I mean, we could get up to, let's just be really conservative. Let's say just get 40. And then it backs off and it builds, and then it gets sold off and the banks get to cover their shorts and they're happy and they make money on some of their trades. And let's say it settles in at, let's just say 35, the breakout point, which is not unusual. A lot of commodities, once they make a breakout, they'll retest that breakout for a very short time and then start back up. And that could happen fairly easily, in my opinion. For me to really get really comfortable with silver, is momentum being confirmed. And I'm, shouting out Michael Oliver for all the great work that he does. But for me, I'd want to see a 7-to-1 ratio. That would prove to me beyond a shadow of a doubt that, silver is really going to continue and do well.
Silver markets are experiencing renewed optimism as prices continue their impressive 2025 rally, with leading analysts projecting significant upward momentum in the precious metal. The white metal has already demonstrated remarkable strength this year, posting gains of over 26% since January and trading at $36.41 per troy ounce as of Monday's session, representing a 0.29% increase from Friday's close of $36.30, according to FXStreet data. David Morgan, silver analyst and publisher of the Morgan Report, says silver must decisively break above $50 before aiming higher. He believes sustaining prices above $55 would put most holders in profit, remove resistance, and likely trigger strong momentum buying. The fundamental backdrop supporting silver's bullish outlook extends well beyond technical considerations. Rising industrial demand, particularly from green technology sectors, is creating sustained pressure on supply chains already facing constraints. This combination of growing consumption and limited supply availability is establishing what many analysts view as ideal conditions for continued price appreciation. Morgan's long-term vision for silver is particularly ambitious. He suggests that if the metal gains broader institutional recognition and captures just 1% of global capital flows, it could potentially reach the historic monetary ratio of 16-to-1 relative to gold, or even exceed that traditional benchmark. His bullish stance on silver isn't new. Morgan has been forecasting the possibility of $100 silver since as early as 2003, demonstrating his long-held conviction in the metal's potential. Market analysts are increasingly confident that silver may outperform gold in the current cycle, driven by its dual role as both a precious metal investment and an essential industrial commodity. Some experts are projecting that silver could break into triple-digit territory by 2040, assuming continued growth in industrial demand coupled with supply shortages. However, under more extreme inflationary scenarios, particularly if central banks maintain aggressive monetary policies, silver prices could potentially exceed $100 per ounce, much sooner than the projected timeline. Before we begin, make sure to subscribe, hit the bell icon, and share this video with others. Your support helps us continue delivering valuable insight.
For me to really get really comfortable with silver, is momentum being confirmed, and I'm, shouting out Michael Oliver for all the great work that he does. But for me, I'd want to see a 7-to-1 ratio. That would prove to me beyond a shadow of a doubt that, silver is really going to continue and do well. And then, realistically, if we just take all the data that we have and look at recent times, the average is around 50-to-1, which means silver from 100-to-1 ratio to 50-to-1 will double versus gold. So if you're smart, you could swap your gold, let's say an IRA for silver, but you love gold, but you don't really like silver, but you're smart. You swap all your gold into silver, let silver's price get to a 50-to-1 ratio, which is the average over the last few decades, and then switch back into gold. I think that the reasonable targets right now are 50-to-1 as the beginning. If we get an overshoot, which we could, then we've already seen 33-to-1. It was there temporarily, but that was the ratio we've already seen in this market. So I think that's a target. That could be the high. And if we really overshoot and silver gets voted by, the world as being the place that, 1%, it'd only take 1% of the world's money moving the silver market to drive it to astronomical price. We got that, you could get the monetary ratio of 16-to-1. And if it really went ballistic, you could go beyond that. But, I like to see it step up. I mean, people talk about $100 silver, and I wrote about it in 2003. So it's out there in print. I can't take it back, nor do I wish to. But before you get there, you got to get to 50 again. And then you got to get to 50 and break it and to get above it, start trading 60 and 65, 70, 75, 80, 85, 90, 95. You got to get there. And it should have no overhead resistance, because once we get to, 55, when we're there for a matter of days or weeks, there's no one that isn't holding silver at a nominal profit, not a true profit, depending how long you held your position. But the number's a bigger number than it's ever been. And so people will hold on to see how high is high. So that will be a momentum case where the owners of silver, a lot of the institutions, all the retail, not all, but most of the retail. So that means the float is next to nothing. So any new buying pressure will take it higher. And since silver is such a small market, I mean, you could see 100, fairly easy under those conditions. The problem is, are we going to see those conditions? And the reason I bring that back full circle, Patrick, is because what I said about retail. Why are people selling silver at 35, 36? Well, there's a numerous reason. I can't take a survey of everybody that's selling their silver, but some people are burnt out. Some people need the money. Some people have given up on the silver story. Some people inherited it and they don't know what to do with it. So there's lots of reasons, and I can't go through them all, but basically we've got to look on aggregate, on balance, what the majority is doing is selling back. They're not buying, which is in a way worrisome. Just confirm that a bit. I mean, we could get up to, let's just be really conservative. Let's say just get 40. And then it backs off and it builds, and then it gets sold off and the banks get to cover their shorts and they're happy and they make money on some of their trades. And let's say it settles in at, let's just say 35, the breakout point, which is not unusual. A lot of commodities, once they make a breakout, they'll retest that breakout for a very short time and then start back up. And that could happen fairly easily, in my opinion. And so that wouldn't really hurt too many silver bulls unless they're leveraged and they're over leveraged or whatever. So we could see that. And then, UBS knows that the equilibrium price based on silver, which is not the retail market, which I talked about so much, but how many silver bars are in inventory for investment or in industry. And that count is going down because those commercial bars are being used for solar panels and all the electronics and everything else. So that's been in a deficit for 4 years. So they're looking at it from that perspective, and they're kind of ignoring what the silver stackers are doing, because that's really truly the silver market. It's a paper derivative market based on 1,000-ounce bars. And they say, you know what? The equilibrium's around 40. And they would know, probably more than me. I mean, I'm not a know-it-all. I'm a learn-it-all. I certainly don't know everything about the silver market.
The current silver market surge connects directly to David Morgan's analysis of deliberate monetary suppression that created today's explosive price potential. The 1873 Crime of 1873 Coinage Act ended silver dollar minting, beginning systematic removal from monetary systems that established the artificial scarcity now driving market dynamics. Silver's gradual demonetization from the 18th century to 1964, during which U.S. coins contained 90% silver, conditioned the public to see it as ordinary currency. This perception masked silver's intrinsic value, creating generational knowledge gaps that weakened investment demand for decades. The 1964 end of 90% silver coin production completed monetary removal, severing the dollar's connection to tangible value and establishing silver's current dual identity crisis between industrial commodity and monetary asset. Today's dynamics reflect this historical suppression, where systematic worldwide removal created artificial investment scarcity while conditioning populations to view silver as merely industrial. Let's get back to the interview.
I'm looking for, I think the best case scenario is over 40, but let's say I'm wrong and it gets all the way to 50. Many of my friends think it's just going to go through 50 like a hot knife through butter, the old cliche. It may, but I have a hunch it's going to stall out at 50 and then consolidate and maybe come back and go through it. But it's tough to look at all aspects of the market. And if we had investment demand, if retail wasn't buying, and they're not, but institutions were, and they're coming in and this big pension fund bought, $50 million worth of silver, and another pension fund bought, $200 million worth of silver, and hedge fund came in and bought, 50 million ounces or something. if those things are happening, I'd be much, much more confident that we're going much, much higher very quickly. But until this short paper situation is resolved, which is I just explained how quickly it can be resolved,
Yeah.
I'm just going to hold my positions. I'm not going to add. I'm just going to wait and see. I mean, I really would rather give out news and tell you the institutions are coming in hand over fist like the banks have in the gold market. Silver doesn't have that luxury that it's considered to be a monetary metal by institutions. It's sort of the mavericks. It's the one-offs. It's the free market thinkers. It's the people that can think on their own or are willing to take, let's say, a higher risk for a higher reward, because that market is much smaller than the gold market. And if you really want to talk turkey, let's mention platinum. I mean, the commercials are long in platinum. Now, with the commercials long in platinum, that gives me more conviction that platinum's still going to keep running without too much resistance, at least for a while. But the commercials are not long in silver. They're very short. So anyway, I think I gave you hopefully enough to think about, Patrick. And it's going to go where it's going to go. I mean, maybe there's some, big, deep pockets on the other side, the trading funds that have more, what they call dry powder, meaning, funds, money, capital to put into this market and really squeeze the shorts for a long time. I doubt it. I followed these markets for 4 decades, and I don't see that out there. But we do have that kind of that unknown, and that's China, with the Shanghai Futures Exchange and more physical going to China, through China, and being in the futures market in China. And that's a factor I won't ignore. So I'm not going to discount everything I just said. I just want to say it's a tougher market to analyze, but it's also in a spot where could I be wrong? And yeah, and what would be that factor? It'd be the unknown. It'd be what we don't really know about the Shanghai Futures Exchange and the amount of demand that they may be exerting on, let's say, the Western banking cartels or elites that are very much winning most of the time in these markets. Well, I would say that, the crime of 1873, I mean, when the Eastern establishment decided to go to a gold-only standard, they had more control, and silver was demonetized officially, although really it did circulate, and the law was changed a few years later, but it really took a lot of emphasis out of silver as money to gold only as money. And that's been true from that time really forward. Of course, silver circulated as money in the United States through 1964. And no one really thought about it because there's really enough, because basically it was coinage and change, really. It wasn't like people even thought of silver as a way to save for the future. It was just money of the realm. So when it changed, and Johnson basically said, silver's too valuable to be money. Wait a minute, money's supposed to be valuable. So we're going to start making these Johnson slugs. It came in subtly. No one made a big deal about it. Some people understood what was going on. I was one of them as an 11-year-old kid, but many of the adults just blew it off, didn't understand it at all. And of course, in the 70s, a few years after that happened, 1968 was the last year you could take a silver certificate and actually get silver for it. And after that, that was closed down.
Gold and silver have experienced vastly different roles and perceptions over time, with gold maintaining its status as a primary monetary asset, while silver gradually lost its monetary standing. Despite this shift, silver's industrial utility and historical legacy continue to support its long-term value. As awareness grows and economic pressures mount, silver may begin to reclaim some of its lost significance alongside gold in preserving wealth. Could silver regain its monetary status and challenge gold's dominance in the coming years? Let us know your thoughts in the comments. If you found this video insightful, don't forget to like, subscribe, and share it with others following the silver story. Thanks for watching. See you in the next one.